In a trading statement, Swiss-based luxury goods group Richemont said sales in the quarter ended December 2011 rose 24% at both actual and constant exchange rates to 2.6 billion euros. The company stated that growth had been solid across all regions and channels. Richemont will release its results for the current financial year on Wednesday, the 16th of May. Chris, let's start with you. Sales up 24%, beating forecasts for a 20% rise in a Reuters poll. Sales were 2.62 billion euros, as I mentioned in the intro, against a forecast of 2.53 billion. And this clearly on the back of growing demand in the Asia-Pacific region, which reported growth above group averages. Take us through this China growth story in particular, because there's strong demand coming out of Hong Kong and mainland China, the resilience of the Chinese consumer, and should we be concerned at the decline in the sales growth rate in the Asia-Pacific region? They were down 36%, and what is this attributable to?
I think we need to, often people look at this as quite cyclical. In terms of the global economic cycles, this is a company associated with aspirations, and I also think you can associate it with the widening wealth gap, and it shows that in most part of the world there are in fact two speeds to the economy. The people who are struggling for work, struggling for to actually gain access, and those that are in. And Richemont effectively is a play on that. The growth was phenomenal. This was at a time that the global economy is actually slowing. Europe clearly showing signs of recession, and China still showing signs of recession, etc. Obviously one needs to, this company depends on sales, but I wouldn't be too worried about a soft patch here or there. You will get that with Richemont. The question is, for how long will it be able to be sustained? Is this a long-term growth, or are we going to see something come down? I think the history of this company suggests that it can actually withstand bad times as well, and the share price really reflects that. It is, if you just put this in your bottom drawer and ran with it, you'll still be doing very well. Okay, it's been the share price is in a bull market. It outperformed the JSE overall last year, and I have no doubt that it can continue to achieve some growth. It's got a solid earnings stream, it's got growth, and it's got a bit of yield. And I think those three things will be why this company remains a good investment.
Craig, let's come to you in Cape Town now. Chris mentioning the fact that sales are very crucial for a company like Richemont, but we saw last week the S&P lowering its rating on 9 Eurozone nations. Sales in Europe down 15% from 22% in the first half, and obviously they're benefiting from purchases by travelers, particularly Chinese travelers to Europe. Now, last week US jeweler Tiffany said that Christmas sales weakened significantly and lowered its full-year profit forecast. We also saw Swiss rival Swatch Group warning that sales growth would slow to between 5% and 10% this year. What do we attribute, just following on my initial question with Chris, this really startling performance by Richemont? Is it because they have stronger brands or just a better diversified portfolio?
I think the diversification is part of it. I mean, it is the second largest luxury goods producer. Louis Vuitton, LVMH, is the largest with about 50 odd brands. But so that diversification certainly helps. But if you look at so the likes of some of their big competitors, the growth has also been around Asia. So it's that story of Asian opulence, the running after wealth. So that I think that's part of it, and also what Chris was saying about the gap between the have and the have-nots, the affluent still having that spending power, that's certainly a factor. And I think new research that's coming out seems to indicate that may be the situation for the next decade to come. So Richemont is still very much a story around what we think will happen in China, but it's also India, Russia, the Middle East, Gulf. So there's still growth in that whole Asian market, and from that point of view, I think going forward we can still see a whole age of spend in the Asian markets.
Chris, let's come back to you. In the interim results for the 6 months to September 2011, they had a very strong net cash position in the region of 2.6 billion euros. What have the implications of the strong cash balance been for shareholders as far as dividends are concerned?
Okay, firstly, they're able to maintain and possibly grow their dividend, and they can actually weather any downturn of reasonable proportions. They've got a war chest, if you like, is to be able to take on distressed players in their space. In other words, they can actually add to brands because they've got buying power to do so. If any brand becomes distressed, and it's possible in a downturn that does occur, but if you take a longer term view and you say which firms are likely to be winners and losers, this one would be in the winners camp.
Craig, let's come back to you now in Cape Town. They're repositioning Montblanc, which for centuries has made fountain pens, but they're looking to go the route of luxury watches. Now, sales for Montblanc climbed 22% in the last financial year to $87 million, lagging Richemont's 33% increase in revenue to 8.9 billion rand. People are signing less because of emails and smartphones and chip and PIN credit cards. But can we not attribute this to a potential dilution in the brand's equity as far as Montblanc is concerned? And what will this repositioning of Montblanc mean for Richemont going forward?
Yeah, look, it seems like the sale of watches for Montblanc has been positive in the American market, but overall the revenue has been flat, and it remains to be seen whether one will transform your mind from a quality fountain pen to a wristwatch, or pocket watch for that matter too. So it remains to be seen, but certainly the growth is tempered off from even the previous quarter's indications, which I think was about a 5% increase in revenue. There is some restructuring happening, but of course it remains to be seen. But what I think is interesting in the whole Richemont story is they are looking at, there certainly is a move to alternative assets. So Cartier, Montblanc pens, etc. They are seen as almost a store of wealth. And now, of course, with De Beers, you're seeing diamonds, which is another form of spend where the affluent will say, well, I'm investing in something. It's not just a true expense to the bottom line. So I think with that positioning of brands, if there is that perception in people's minds, they'll continue to do well.
Craig, let's come back to you and just get a very quick currency or forex outlook for 2012, just in terms of the forex front. The outlook for the Swiss franc, obviously the majority of the group's manufacturing facilities are located in Switzerland, and a stronger Swiss franc is of particular importance to their cost of sales. What is your outlook for the currency?
That will put it, but I think the Swiss authorities have now stepped in to actually stem that. My suspicion is that Richemont will be looking to actually get alternative manufacturing facilities where you maybe not where precision is required, or whatever the case might be, or to at least outsource some of it to other countries. It must be a strategy that they're looking for, because the Swiss franc has been quite rampant, but the authorities have stepped in. That's on the cost side, but on the revenue side, Richemont is particularly well positioned. If any currency goes into trouble, they'll have revenues in other streams, and that's important. I suspect that in this kind of space, the cost factor is important, but it's not a critical factor, because effectively it's brand value that actually gains your margins, and if you've got a very good margin, the actual you are in a position to actually take in some of those costs. I
don't mean to cut you short, Chris, but it's time for us to go for a vote and figure out if Richemont is hot or not. At the top of the show, you said that this is something you can put at your bottom shelf and just see that share price shooting up. Today they closed at 44 Rand and 1 cent, a 12-month high 47.25, so trading below that 12-month high.
Just below its 12-month high, but I still think this is something that you'd put in as a core portfolio holding, something that you can actually put in a portfolio for the long term. I would certainly say hot.
Certainly hot for Chris Hart here in Johannesburg. Craig, let's come to you in Cape Town. Hot or not, and would you put it in your portfolio?
Yeah, I think in terms of where the rand is at the moment, the earnings growth projected, I would certainly look at it, but I'd like to buy it in a weak market where there's a bit of a pullback, but I don't know if I'm going to get it, so I'd still say hot, yeah.
Still hot. Let's move on to ArcelorMittal now. ArcelorMittal South Africa resumed full production at its Newcastle plant on the 9th of December 2011 after it was hit by a furnace failure in August last year. The furnace failure impacted an already subdued outlook for the company, and ArcelorMittal had to source steel from external sources to minimize the impact on its customers. The steelmaker said the insurance claim was still estimated at 1.1 billion rand. Chris, we'll start with you again. Now, this was quite a catastrophic structural failure that took place in August. The gas clearing plant failing, and it had a huge impact on production, as I mentioned in the introduction. But then they spoke about celebrating the centenary of their Vereeniging operations.
Yes.
Now, that's a 100-year-old plant. Is it consistent with global norms, and are they not risking exposing themselves to potentially another structural failure, given the age of this plant?
Yeah, well, the plant has been revamped and modernized. It's not as if that the original equipment is still the bulk, forms the basis of their production. But steel production is pretty much without disparaging it, it's there is stuff that can last a long time, that doesn't necessarily wear out as such. It's really just a case of keeping the stuff going. I think the bigger challenge that they had was the failure of that Newcastle plant, because you then get a very dreadful dynamic occurring in the operations. Firstly, the cost of repairing, but you've also cut off a revenue stream as well at the same time. So that dynamic is something that's been hitting that share price, and you've also got the dispute between with its supply with Kumba that has occurred. Now we're starting to get some clarity as far as that's concerned, and once it's completely clear, I think it would assist ArcelorMittal in a way that they may be able to claw some of the beneficial nature of some of those contracts back, and that's there still is uncertainty there, and I think that's reflected in the share price as well, is that the share price hasn't really gone anywhere for about 6 years.
Let's get to Craig in Cape Town now. Chris saying that the share price hasn't really gone anywhere in 6 years. Just if you give us your sense of what we can expect for the fourth quarter. Certainly rand weakness is something that will act in their favor, because the third quarter results were very disappointing. Headline loss of 460 million rand, which translated to a loss per share of 115 cents, and they cited equipment failure, higher input costs, and 3 fatalities. Are we getting a better sense for the third quarter for the fourth quarter rather going forward, and what can we anticipate?
Well, you had a lot of raw material pressure, cost pressure in the third quarter, which has tapered off a little bit in the fourth quarter, but you still got significant expenses like electricity, port costs and things like that will continue to go up in the foreseeable future. And of course, if this whole thing, the outcome with the Sishen project works well, they still could be the second lowest cost producer. So as long as there's demand, and they can keep costs down, they can make it work. But there's a lot of factors, and then they've had a lot of headwinds. I think they're also going to have to expend quite a lot in changing processes because of environmental legislation. So there's still headwinds ahead for the company, and whether management can make it work remains to be seen. In my mind, they haven't quite proved their mettle yet. And there are obviously those concerns on the table.
Craig mentioning the headwinds that they face, but surely something that was good news for them was in December, with Judge Zondo's ruling at the end of December confirming that ArcelorMittal's the Sishen Iron Ore Company has an obligation to in fact supply the iron ore at cost plus 3%. What do you make of the judge's ruling?
That, as I say, is helpful, and that might actually provide some underpin. But ultimately, one also needs to look at steel and also iron ore and its association in that sense. It does depend a lot on the fortunes of China, and there are signs of slowdown. And so when we look about headwinds, is China about to slow down? And if so, well, what is the prospect for steel prices? And that might be a difficulty. We do have, it's a difficult one, because domestically there's at least, there's reasonable infrastructure rollout. in Africa, there's a reasonable infrastructure rollout which ArcelorMittal can actually take advantage of. But what is the condition of the overall global economy? It's almost one has to take a view. If you've either say it's upside, one can buy. If there's downside, no.
Well, what's your view, Chris?
Well, my view is be careful. I think there are better stocks to be had that don't have a whole lot of these problems. But ArcelorMittal is one of those where once everything clicks together and gets aligned, you will want to be in the share. But I have a funny feeling that things are not aligned at the moment. This is not a time to get in.
Chris saying things are not aligned at the moment. And Craig, I want to come to you about the possibility of seeing steel prices being regulated here in South Africa. We saw ArcelorMittal raising steel prices with effect from the 1st of November, saying that flat steel would increase by between 3% and 6%, while prices for long steel products would be raised by between 4 and 8%. If ArcelorMittal continues to price above the basket, do they not run the risk of invoking price regulation?
I'm not sure if regulation is a priority right now, and it certainly would be something that would hurt the company. But I think what's more important is where they are through the cycle. I mean, 25 to 30% in the South African market relies on the construction industry. I think the cycle's more going to be a 7 to 10 year cycle. I'm not so sure that we're going to start seeing the recovery in that sector immediately. And these are things that would affect it. Yes, there's a lot of growth in the African continent, just north of us in Angola, but they're not really in that market. They're probably in Zambia, Kenya, Zimbabwe to a degree, which also has its problems. But if they get that growth on the continent, then I don't know whether price control is really going to be a big issue.
Craig, let's stay with you in Cape Town and get a vote now for ArcelorMittal. Hot or not for you?
As I say, probably going forward through the cycle valuation, could be a P of around 8 or so, but still not hot. I think there's too much risk, so I'd say no.
Still not hot for Craig. Chris, let's come to you. You're shaking your head.
No, also not hot, simply because there's still too many uncertainties. The factors are not aligned to actually drive this. Once it is, I think you would take it would be there, but in the meantime, I think it becomes there's better things you can do with your capital before actually taking on this one.
Now, obviously, it's the construction sector that's a major consumer of steel, but certainly the good manufacturing data that came out last week, is that any comfort at all for the likes of ArcelorMittal?
I think it can be, but as we said, there's a whole lot of pluses and minuses, and you've got to look at this and say, how do you actually make an investment decision? Are there better prospects? And that's the point, is that they're probably better prospects at this stage, but there will be a point where you will want this.